Morning everybody, Simon Dixon here, and today in this video I'm going to go through Bitcoin, cryptocurrency and tax. I have to say from the very beginning, I'm not a CPA, I'm not a qualified tax advisor, I'm not a tax attorney, I am none of these things. I'm just somebody that's been involved with the industry that has to navigate some of these different things that you need to consider. So none of this can be treated as tax advice or legal advice in any way or any capacity or financial advice. I'm just going to give you a bunch of things that you need to think about and understand so that you can actually go out there and get your own tax advisor or accountant that can help you on these matters, because one thing I've learned over the years is that it is so unique to your situation. So having said that, what I'd like to discuss today is obviously the IRS has been sending out letters. So if you're in the US, you may have received a letter from the IRS. And I'd like to go through some things that might be useful for you, might be helpful. And for those of you outside the US, to get ahead of this, some things that might be useful to you. So let's just dive straight in. So the first thing to point out is that the IRS efforts only affects US residents or US taxpayers. So if you are a US taxpayer, then this will be relevant to you. If you're not a US taxpayer, then there's still things to learn here so that you can get everything up to date if you haven't done that already. The second thing is my involvement in terms of tax and crypto is my very first, well, I think it was, the archives can prove me wrong or not, but I believe it was 2013. I became a director of an organization called the UK Digital Currency Association. I was still a CEO of banktothefuture.com, but one of the initiatives in 2013, I'm not a UK resident anymore. I moved to Hong Kong and now live somewhere else in the Isle of Man. But one of the tasks that I had to do was we were guiding Imaginary Revenue and Customs, HMRC, which is the equivalent of the IRS in the UK, on the tax treatment of Bitcoin and other cryptocurrencies. Now, things may have changed because I'm not up to date with what's happening in the UK, as I'm no longer a resident there, so it doesn't really affect me. But one of the things that we got was a formal opinion and guidance letter from HMRC that they published in the tax treatment of Bitcoin and cryptocurrencies. And that was really my first introduction to the subject. And the end result of that back in 2013 was that the HMRC took a very pragmatic approach, which is which is often confusing for people, but they took a facts-based approach of looking at how you are actually using Bitcoin and cryptocurrency. So, for example, if you are mining Bitcoin, then they saw it on a facts-based approach as income, and therefore you would be subject to income tax. If you were using Bitcoin as a currency, then, for example, you were using it in conjunction with a Bitcoin debit card, or you were using it to make purchases on services, then they would treat it as a currency, and the tax treatment of a currency is very different. So it's just like a foreign currency in the case of the UK. So imagine you are spending euros. What would be the tax treatment of spending euros within the UK? And if they were converted, there would be an implication. And then those that were treating it as an investment, then it would be subject to capital gains tax and treated more like a property or an investment or a stock or a share or something like that without any kind of stamp duty. So really you are subject to, if it's treated as a currency, I know in the case of the US, there are certain state-based initiatives to treat transactions under a certain amount as a currency, which not tax advice may be tax-free, depending on where you reside and the circumstances around your transaction. If you have followed a HODL approach and you bought some Bitcoin, then you must record the price at which you purchased that Bitcoin, and you can go back to the archives, look it up on the blockchain, whatever you did or however you purchased. Or if you purchased through a service like Coinbase and you're a US tax resident, then Coinbase was subpoenaed and had to hand over approximately 20,000 files and or individual customers' records to the IRS when they were subpoenaed. Originally, the IRS tried to get all the data from Coinbase, but Coinbase pushed back and fought it and ended up only having to give US residents. But I believe that Coinbase sent a letter or emailed everybody that where their records had to be handed over to the IRS. So yeah, it's capital gains when you purchase it. You need to look at your previous price, and then depending on your jurisdiction, most countries would only consider it a taxable event if you sold it. And I guess in crypto, there's different definitions of sold. You could have either converted it to fiat or converted it to something like a stable coin like Tether, or maybe you could have converted it crypto to crypto. I'll go through those different situations and scenarios that you might have gone through. And then finally, if it was used where you were receiving your income, maybe you were getting paid your wages in Bitcoin, or you were mining in Bitcoin, then simply in the case of the UK, they were treating that as income, and then it would be subject to income tax. And further guidance was obviously needed. I think they've issued further guidance since, but that was the situation back in 2013 when I was a director of the UK Digital Currency Association, and part of our exercise was to guide HMRC on the tax treatment of Bitcoin and cryptocurrency, and they led to that public statement. Anyway, and then my other involvement is obviously finding and making sure that I am paying my tax based upon my tax treatment and my residence and my personal situation. So what does this actually mean? So firstly, a number of companies were subpoenaed by the IRS. The most notable was Coinbase. The IRS and other tax authorities around the world, I am sure, are investing significant resources into ensuring that any money that they can collect, they will try and collect. You've got to remember, countries like the United States are currently $22 trillion in debt, and they need your money. So if you haven't paid your tax, then they are most likely going to be coming after you in some capacity, depending on how you did this. You need to review your situation. I think due to again, I can't take this as legal advice, but due to the innovative nature of Bitcoin and crypto, they will probably treat you with some kind of grace if you move forward and say, in the past, I wasn't really sure how this worked, and here are my records, and here is what I think I owe, or whatever it may be. I would hope that they might factor that into their considerations in determining how to treat this. But I believe about 20,000 records were handed over from Coinbase to the IRS on a subpoena. They fought, and that's what they had to do. I believe that the announcement is that the IRS made a public announcement that they are sending out their first 10,000 letters. So there'll probably be more to come for US taxpayers. And those are from the records that they've collected together, really issuing three types of letters. One, just an advisory note, an educational note, letting people know that they should be paying their taxes. And others probably going into a deeper audit or requesting more information. Or I believe some people have said that they're asking for you to confirm in writing that you have received this letter. I can't give you advice around what you should be doing to that. That's definitely where you should be meeting with your tax lawyer or tax attorney, or, and getting bespoke personal advice on how to actually deal with that and what to do next. So a few random thoughts that might help you in preparing for what comes next. The first thing is that from my understanding, the IRS treats Bitcoin as property from the perspective of tax. Which means that, let's imagine you purchase something like a property, like a real estate or something like that. You would have had a record and a recording of, real estate's not really a great example because there's tax exemptions for primary residents in some countries. So let's say you bought a stock or share, then you would have recorded a price at which you had purchased it. And then when you decide to sell it, you would have recorded a price at which you sold. And if you had made a profit, you may be subject to capital gains. If you made a loss, you may be able to offset some of that loss from your capital gains and tax. So really the key thing for you to have done is have a record of when you purchased that Bitcoin or that cryptocurrency, and then have a record of when you converted it to either another cryptocurrency, a stable coin, or converted it to dollars and or another currency, fiat currency, and transferred it to your bank. Those are the main records you're going to need. If you were frequently trading, then you're probably going to need records of everything you did in between, and you're going to have to go back through the archives, look it up on the blockchain if you were sending the cryptocurrency to a different wallet, or check out your exchange account, where your exchange account will hopefully have records. And obviously, remember, exchanges are going through their own regulatory changes as well, and they're going to have to adhere to higher standards and probably create user experiences that make it easier for you to do this and have records of the prices. If not, you're going to have to go to a service, make an assumption about what service you use in order to price Bitcoin or that cryptocurrency, and keep a record of how you priced it, and speak to your tax advisor about whether they think that's a suitable, because obviously cryptocurrencies are priced differently on every exchange, but you could make an assumption about what type of service you used in order to find the archive price, and keep a record of that, and document what assumptions you used when setting that price. So IRS will most likely treat it as property. There's a confusion probably for many people because the Securities and Exchange Commission that regulates all securities in the United States has been treating many cryptocurrencies as securities. The CFTC, which regulates commodities in the United States, has been treating Bitcoin and other cryptocurrencies as commodities. And the IRS that is in charge of tax collection in the United States is treating it as property. And other organizations are lobbying for it to be treated as currency and all different things. So it's a very confusing matter, which is why I think my opinion, my perspective is that if you start to do things properly that you haven't done maybe properly in the past, then there might be a degree of grace given the innovative nature and the confusion in the classification and tax treatment of cryptocurrencies like Bitcoin. Another random thought and thing that might help you is that if you have been following the HODL approach, for those of you would know that phrase, HODL is hold on for your dear life, and it originally came from an early crypto investor that was on a Bitcoin talk forum and was drunk and was trying to say hold and spelt it wrong, and HODL became a kind of a mantra in the Bitcoin and crypto industry for savings and keeping your position. My perspective and my opinion and my understanding is that if you have been holding it, then there's nothing that you necessarily need to do, but you should get that checked with your tax advisor or tax attorney, depending on your situation. But if you haven't sold it, then you haven't realized a taxable event yet, most likely, unless you've spent it, sold it, used it, or engaged with it in some kind of way. If you've just bought it and held it rather, then my experience, again, without being a tax advisor or a legal advisor, is that you don't need to do anything, but you might want to start planning, if you've accumulated significant wealth, exactly how you're going to treat that and record that, and your tax treatment of that, should you decide to spend it, sell it, use it, or do something with it, or invest it in another cryptocurrency, or trade it, or do whatever you might do. So those of you that are holding it, you will have less of a headache. Those of you that have been trading will have more of a headache, and that is because you've got frequent transactions, frequent records, and you're going to have to go back, make some assumptions about what prices you're using, and give documentation around where you got those prices for, and the assumptions that you've used, the websites that you've used in those prices, and then you're going to have to go through each and every trade and ensure that you have the full and up-to-date records. The problem is there's a lack of accounting software that will make that process easy for you. But entrepreneurs, and I believe there are the first few services have come around to make that easier. You might want to do a bit of research in any tools or opportunities that companies might have created software and solutions to make that easier for you. But you hope that the exchanges that you're using are going to make that easier for you as well, and have a good archive of all your records. And then you're going to need another site to get prices, maybe. The other thing I think that might be useful in determining what you are doing is some people might have a school of thought that if you went crypto to crypto, then you may not have realized a capital gain. My opinion and my perspective, that's not tax advice or legal tax advice, is that if you switched it from one crypto to another crypto, then you probably created an event that would certainly be, you'd want to consider putting that on your tax return or keeping the records of it and treating it as some kind of taxable event. And so in that case, if you're not going to fiat, then you'd probably want to actually have the price at which the second cryptocurrency that you converted to was the original cryptocurrency, and you're going to want to have those archives and records and the dates that you actually did it. And if you realized a gain on the first cryptocurrency, then you want to start asking your tax advisor how that might be treated and what tax you need to pay. And maybe you traded it into another cryptocurrency and then realized a loss if it was a bad trade, and whether that can be offset. And the base, obviously you'll be using the base currency in the country. So for example, if you're in the US, you'd probably be using US dollar as the base currency in order to get those prices. Another thought is that if you use the stable coin like Tether, maybe that is not converted to fiat and therefore not a taxable event. You're going to have to speak to your tax advisor, get an opinion and perspective on that. The conservative approach that I would follow is treating a stable coin like Tether, if it's pegged to the US dollar, then treating it as if you did a US dollar transaction and you transferred it to your bank account, and treating that as a taxable event as if you didn't do it through a stable currency, you just did it through your own currency. But you'd have to get your own advice and opinion on that. And it will be different for each country as well. What else? Another thing to consider is that if you are actually, you are sat on a holding and you have followed like a hodl approach and you haven't really done much trading, you haven't messed around with it too much, but you're sat on a large gain right now, or a large, then you should definitely use some of your funds to invest in a decent tax advisor. And really consider your situation. If you are 100% committed to the place that you live, the city that you live, the state that you live, your family's there, your children's school is there, you have no intention of moving, then from my perspective, then you're just going to have to be paying taxes in that jurisdiction. If, however, you want to change in life My understanding is that in the US, it's exceptionally hard to, not be a US taxpayer, even if you move abroad. But I have got friends and met people that have completely legally followed by the book a tax strategy to move to Puerto Rico, because Puerto Rico has an agreement. I don't know the intricate details because it's just not been too relevant to me. But Puerto Rico has some kind of agreement with the United States or other states in the United States, where there is a way of becoming a Puerto Rico resident if you follow the rules, and you definitely want to get advice from an expert at how to do that. But you might want to do some tax planning. There is a difference between tax evasion, which is illegally not paying your tax, and tax avoidance done in a legal way, which is where you plan carefully and follow all the rules and guidelines and optimize your situation based upon your goals. Some people would just not want to move to Puerto Rico in the case if you're in the US, and therefore you have to figure out whether that's an option for you or not. Other people might want to, if you're in a different country, then there are certain rules around. There were rules around when I was a UK resident and no longer a UK resident, and you want to follow those guidelines and get really good advice on exactly how to do that. And it would have to be a genuine decision that you're comfortable moving to another country. Maybe you want a new experience. Maybe you're comfortable doing that. Other people, they're just 100% committed to where they're from, and in which case you have to pay the tax in the country where you're from. And make sure that you get some good advice around, whether you can reinvest those gains into different assets, offset some losses, but invest some time with someone that you think is, you've done your research, is going to be able to give you the correct advice on that. What else can I say? Other nuances that you're going to have to make an opinion from. Things like maybe you receive the coins for free via an airdrop or something like that. My guess, the conservative approach would be to consider that as acquiring a crypto asset at zero. And therefore, if you actually sold it or traded it, you realized all of the capital gain based upon the price that you actually sold that at. And therefore, you'd want to report that. Whether in your country mining is considered income or an investment or a currency or capital gains, that was the issue that we were debating with HMRC way back in 2013. You want to find out with your tax authority, where in the country you reside, might have released some guidance on that. Otherwise, you're going to have to make an opinion with your tax advisor on how to treat that. Other things is hard forks. How would you treat, for example, maybe you had Bitcoin and you got some free Bitcoin Cash, or maybe you had some Bitcoin Cash, you got some free Bitcoin SV or Bitcoin Gold or Bitcoin Diamond or Bitcoin Private, or any of these other crazy forks that came where you were just given free cryptocurrency. The conservative approach would be to treat that as cryptocurrency that you acquired at a price of zero, and then when you converted it, take that price in the local currency and consider that a taxable event, and whatever your tax treatment is. The other thing is, what effect will this actually have on cryptocurrency? So obviously, Bitcoin gets a lot of negativity around the world for being a tool for money laundering, tax evasion, and all these things. Providing clear guidance for people so that they can plan accordingly can only help that situation, so that people understand and realize that cryptocurrency, apart from some of the private ones, and we don't know the situation with the private ones in the future, are very traceable things. And therefore, if they can attach an identity to it, then it's really not a good tool for crime and tax evasion. And in the future, there's going to be more and more debates around privacy and different things. But this is the situation. You would go in these things with open eyes and understand how this all works. This will discourage trading from my perspective as well. So, you know, if you are trading really, really frequently, then you're just going to have to allocate some budget to that. But every time you trade, you create a taxable event, and you're going to have to be keeping records and recordings of that. High frequency trading, high frequency tax, and data collection, you're going to have to be doing if that's your approach and strategy. I think it can encourage saving and hodling. So people will be encouraged. And one of the things that I love about Bitcoin and cryptocurrency is it's created a culture around saving, where many people were with their fiat currency, they're pushed into debt, they recycle debt, they hypothecate the debt-based system. But with crypto, I see it as a force for sucking up fiat and putting it into crypto savings, and people thinking in terms of their future more long-term. And I think that's a real counterforce to the debt-based fiat system, to be thinking more in terms of saving and hodling and planning for your future. And Bitcoin seems to be a force that's sucking out fiat into crypto. And those that have saved the longest, you know, depending on when you did it, if you were short-term trading, then you might have got wrecked, you might have done well. But if you were saving, the majority of people that are saving have done well in with Bitcoin because of the economics of Bitcoin. And you can check out some of my previous videos. Just Google in YouTube, Simon Dixon, economics of Bitcoin, and you'll understand why it's a force for savings and understand the economics around that. More clarity means that more companies will start to engage with the ecosystem, which can only lead to more adoption. And so while you might see this as a negative or the end of an era, the more clarity means that more people can prepare, more jurisdictions and countries can start competing with each other and come out with more favorable crypto policies, and therefore there'll be more options, and you can decide where to live based upon their crypto policies. But it means the more clarity, the more services, more entrepreneurs will create solutions, and the more tools that will be available, the more opportunity, more growth in the ecosystem. So things will become easier for you, more adoption can come as a result. And I guess the counterforce is that the protocol level developers will also start to try and implement more privacy enhancing features as well. And there will be more development on that side for all sorts of things and reasons why privacy is important, and why these things will come as a result. So I hope that's some useful information for you. The takeaway is that you can take some of these tips and advice, but you definitely want to get some experts in your local residency. There's no way I could cover every country in the world, every situation, and I'm also not qualified to do that. Me personally, I rely upon the advice of experts in order to help with those situations, and do everything in a way that you have peace of mind. You've done everything by the book, and you've also done it in an efficient way depending on your situation and circumstances. So I hope you enjoyed that. I think that there will be quite a few people that might have received those letters that are panicking. Perhaps you could help like this video, share this video, retweet this video, and maybe it will give them some guidance and helps and things that they can consider to start taking this seriously and not brushing it under the mattress or the carpet and saving it for later, because preparation is probably one of the key things that will give you the ability to handle this and understand how to deal with this one, rather than just brushing it aside. So please do retweet, please do share. Head over to, if you're watching this on Facebook or Twitter, please head over to YouTube, type in Simon Dixon, and subscribe to my YouTube channel. I go live on whatever's happening in crypto, and try to give these educational topics and different content. If you hit the bell button when you see the subscribe on my YouTube channel, you'll actually be notified by YouTube each and every time I go live. And follow me on Twitter at Simon Dixon Twit if you're watching on YouTube or Facebook, because that's where I do the initial live sessions, and I spend most of my time on that network. So hope this is useful. I'm over and out. I'm going to get back with work, helping companies building the future of finance. Thank you for your time.